Hi guys, this video is about explaining how I got this particular trade setup. For your information, this is volatility 75 index on 15 minutes time frame. What I did was first to observe the trend. Now, market trend as at this side of the chart was trending lower. We had a bearish trend around this side of the chart, where we have high, low, lower high, lower low. Then we also have lower high around here. We have lower low to this level, and then we have another lower high. We have lower low. Okay, and then we have to this level lower high, and then to here more like higher low, because this low here is lower than this very low, and around here lower high, and then we have higher low around here. Okay, higher low, because this low is lower than this, is higher than this low. Then we have lower high and lower low, still on the 15 minutes time frame. So as at this level, from here down to here, we had downtrend. For downtrend, you have lower high, okay, and lower low for downtrend. Okay, so that's one thing you have to look at when you are trying to trade volatility 75 index. Is market trending? Now, in as much as market is trending here, you can enter sell somewhere around here. Okay, but here market is ranging. So when market is ranging, you sell at the top, and buy at the bottom if you are a range trader. So in this particular trend, where do you enter your trade? You enter your trade where you first of all, let's assume this is a range. Let's assume this is a range. When you see range breakout, this is the range. This is going to be our range breakout. This is going to be our range breakout. This is going to be a range breakout, where you can see a retest and then a drop. So from here, you can start to enter your trade. If you are going to enter your trade, you can enter sell at any point here. Now, if you enter sell at any point here, since you have a breakout, and you enter sell at any point here, what will be your stop loss? What will be your take profit? Now, to get your stop loss, if stop loss is You can enter at any point, but your stop loss will be, oh, you have a breakout. But as price breaks out, there's a pullback. So the distance of that very pullback as price breaks out is going to be your stop loss. Okay, from here to here, from here to here, that will be your stop loss. If you are going to enter anywhere around here, so let's say the stop loss is 1000 pips or 500 pips, and then you enter your trade here, you sell here. So if you are going to place a sell trade, let's try and see. You're going to place a sell trade somewhere here, for instance. The stop loss will be 1000 pips, and your take profit will be times ratio 1 to 2 or ratio 1 to 3. But first thing is market trending. Yes, you have a breakout of the range, this range here. You have the breakout, you have the retest, and then you have the break of structure. So at this very break of structure, you see that, oh, market has started to give us low, lower high, lower low. If market start to give us this lower high, lower low, then you can look to sell at any point. But you first of all mark your stop loss. Your stop loss will be the pullback, the distance of the pullback. So if you enter here, the stop loss will be equivalent of this pullback. If you enter here, this is a pullback. You enter this pullback to sell. This is the first pullback. You need this first pullback after the range breakouts. First pullback. First of all, range breakout, wait for the first pullback, then wait for break of structure. Let me highlight it. The first step is 1, range breakout. 2, to identify pullback after range breakout. And then the third step is, now you identify this pullback after the range breakout. Third step is allow break of structure. All right. Fourth step is, now once you have this break of structure, you can enter at any point. Fourth step is distance stop loss equals to the distance of pullback. That's distance of pullback will be your stop loss. That's what I'm trying to do there. Distance of pullback. All right, that's stop loss. Enter now. Allow break of structure. Stop loss distance of pullback. Enter at after break of structure, or enter after second pullback. So we have a break of structure here. You can enter here, or you can enter after this. There's a second pullback here, and price continue to sell. You can enter after this second pullback. What am I saying? Your entry could be this, the break of stop. You have the first pullback after the range breakout. This is the range breakout, first pullback. You can enter here. Okay, the entry can be here after a clear break of structure. Or your entry can be here after this second pullback. This could have been the second pullback. This could have been the second pullback, but you can see another further pullback. So even if you enter at this second pullback, you see the second bearish candle to show that, oh, we have a top. If you enter here, you already measured the 1000 pips or 200 pips or 500 pips for point number 4, which is stop loss. So if you enter at this second candle, you are still covered. Or if you enter at this second candle, second bearish candle, to show that you have a swing high and your pullback is established, you are still covered. Okay. So the first is wait for range breakout, identify pullback after range breakout, allow break of structure, stop loss is equal to distance of pullback, enter after break of structure or enter after second pullback. Now, swing high, swing high or low, swing high or swing low is established after second candle formation. So what am I saying for this point number 6? This is your swing high. Let's say this is your swing high. First bearish, second bearish candle formation. That's this will establish your swing high. But you also have another swing here. First red candle, second red candle, close of second red candle establishes your top or your swing high. And you also have another pullback here. This first red candle, second red candle, close of this second red candle establishes your top. So you can enter at this second red candle or at this second red candle or at this second red candle, whichever way you want to enter. Okay. Now your pullback, okay, is established by this is a downtrend. You are looking for pullback 1, 2. Close of this 2 is your pullback. This is a swing. This is a top, and price starts to form red candle 1, 2. Close of this second one is your pullback. But if you just have one candle and price continues, that's not taken as a pullback. It's taken as more like a base. But if it forms second candle and attempts to wants to continue to go up, that second candle, if price drops from that second candle, and then you have 1, 2, that's your pullback. Okay, so that's that. But this is the range, and this is the range breakout, and price started to trend. Now similar case appears here. Here we have a low, and then we have higher high. Remember, this is a high, but it's a lower high. This is another high, lower high. This is another high, lower high. But price starts to go up, forms a base around here. What do I mean by base? As price starts to form candle, green candles, then you see just one red candle, then price starts to form green candle. That one candle is a base, normal like a stop, a temporary stop, like a temporary pause. That's a base. Then price continues. Then you have not like a base here, then you have start to see drop. So this is a pullback. So at this point where price breaks this high, lower, all these lower highs, that is your change of character. So character has changed from bearish trend, starts to indicate that it wants to go bullish. But you can't just jump in, just like the steps to trade highlights. You can't just jump in and start to buy. you have to wait for range breakout. Of course, that has happened here. You have a range, this range, you have a breakout here. Identify pullback after range breakout. These are pullback because you have this bearish, okay, candles. That's your pullback. Allow break of structure. Now this your break of structure. Your structure is here, and your break of structure are around here. Enter after break of structure. That's done here. Now this stop loss is a measurement of this pullback. Stop loss because of the distance of pullback. This is the distance of pullback. So this stop loss is a measurement of this distance of pullback. Then enter after break of structure or enter after second candle pullback. Now you can enter here after break of structure. Okay, you can enter anywhere here, or you can enter after this second candle. So I could have entered. Excuse me. I could have entered after this second bullish candle to show that we have a bottom or a swing low form. So I could have entered here. Okay. Stop loss will be the measurement of this pullback. So I could have entered here. Okay. Or I could have entered after the break of structure. Okay. When you are certain that price is trending, you can enter here. Or you can just enter here, hoping that price will continue upward. So that's the strategy. The first step is range breakout. Second step, identify pullback after range breakout. Third step, allow break of structure. Fourth step, stop loss because distance of pullback. Fifth step, enter after break of structure. Enter after second candle in the pullback. Then sixth, swing high or swing low is going to after second candle formation. So this second candle formation is it's showing that you have a swing low. 1, 2. This second candle formation is showing that you have a swing high. 1, 2. This second green candle formation here shows that you have a swing low. 1, 2. This second red candle here showing that you have a swing high. So that should guide your trade entry or your trade. So don't forget, when price start to print lower high, lower low, that's bearish trend. Bearish trend. You start to see lower high, lower low. Now, bullish trend. Bullish trend. You start to see higher high, higher low. Now, we have a low here, high, higher. We have a low here. We have a high. In fact, we have a low here. We have a high, lower low, higher high, higher low, higher high. So this already indicates that we have a bullish trend in place. So when you have your pullback, the pullback will be your stop loss, expecting that price will not drop lower than this pullback at any point in time. So that will be your stop loss. Then ratio 1 to 2 or ratio 1 to 3 could be your take profit. So that's that for today's video. If you want to learn more on how to trade volatility 75 index, you can visit the website www.beanfxtrader.com to learn more. Or you can go to other videos on the channel to learn more. on how to trade volatility 75 minutes. See you in the next video.